Okay, evening everybody. Can you all hear me? I know you won't be able to see me, but can you all hear me at least? And then, at least I know that part's working. Okay, perfect. Thanks, Mo. Hey there, Greg and Stuart. Right, apologies. For some reason, the webcam literally shut off as I loaded up to go on stream, and I don't really have time to mess around behind it because it's already 8 o'clock. I should have done a prep run beforehand, so apologies for that. So what we're going to do tonight is you're not going to get to look at my beautiful face, and we're just going to dive straight into everything, and we'll go cameraless, and then I'll tidy it all up, and yeah, next week hopefully we'll be cooking back on gas. It's always something, isn't it? But we do have quite a bit to cover this week. No research token, as I mentioned last week. So we're going to go through the news. We are going to have a bit of a summary of what's happened in week one of the SBF trial. Obviously, with world events going on, not really been much coverage on this. So it might be useful for some of you. Some of you might not be interested. Love to hear your feedback on it. We'll go from there. And then we're going to have a look at UP-tober. And I know what you're thinking, Harry, that was so last week. But actually, we're going to delve into it a little bit more. What actually is UP-tober? Where's it come from? And is there any merit to what people are trying to talk about there? Or is this actually just another crypto influencer sort of bandwagon to jump on and then, just falls flat on its face? So we will have a little bit look on that. We'll have a look at some other market sentiments from a sort of a macro picture. And then obviously we're going to dive into the charts. I know people might be a bit concerned about some price action at the moment. So we're going to go through all the big ones that you guys like to cover, but if there's anything else that you want to talk about, whether that be a token or a subject, please feel free to drop it in the chat and we will try and get to it as best we can. Okay, so you've all actually been able to look at this chart whilst I've been chatting. I don't have to worry about fiddling around with buttons on my stream deck, which is great. So let's have a look at Bitcoin. And I know last couple of days, it's kind of felt like the markets have really fallen. But what I would say, especially with Bitcoin, is we haven't really lost that much. Yeah, we might have had 3 days in a row. We're talking about $600 we've dropped. So we're still well above that 25,000 level at the moment. And yes, we are slightly pulling back. There are some elements that do concern me, but a pullback of this nature is not necessarily the end of the world. I mean, in the previous 3 weeks, we've gone up $1,500, $2,500, so a $400 pullback, not necessarily the end of the world. What is interesting is we have a look at, sorry, because I've moved these, it's all moved across. Have a look at things like the dollar. Now we were looking at this on the weekly for the last couple of weeks, and these levels that I put on are actually 2 weeks old. If you look at last week, it's gone and hit this one beautifully, and then it started to pull back. Now on the daily, looking pretty aggressive, 5 days in a row, pulling back there. But what we've got to say is, for me, the level of about 1053, just trying to see whether or not this previous level of sort of consolidation and interest, remember these are based on the weekly rather than day math, I'll just put it on the weekly, down to this level here. Could we then start to see that as just a pullback? It did go on a 12, 13 week run before consolidating and moving back up, especially with potentially where world events are going. What I would say, if we do look at this on the weekly, is looking, what do they call them? Not a dragonfly doge. I can't remember what it is now. One where it's an incredibly long wick, tiny body, tail, and then a small wick there. But generally sort of like a reversal candle there. Only time will necessarily tell. But obviously we can see there was a fairly decent rejection from that 107 level. But as I say, such strong sentiment up there. It's not surprising at some stage we were going to get buyers being exhausted. I say buyers, it's the dollar, but you know what I mean. Oops, let's put that back. I don't know what's happening with it there. It's because it's on the weekly, I bet. Ethereum, I mean, not as strong as what Bitcoin has looked like, but it actually, I was going to say it's kind of similar. Actually, we've sort of already lost all the gains that we made, and that downward trajectory looks like actually we are following back down. And Casper's unfortunately having a bit of a bad couple of weeks. We have seen pullbacks like this in the past. I know some content has already been sent out on that. But when we get into price sentiment a little bit later on, we'll kind of talk about that. And one of the most talked about subjects, certainly in the chat, is always Casper. So I'm sure I'm going to have some questions as we run through. Let's just change that. All right, we'll get into the news, and I'll try and be as quick as I can going through these. But some of the things that you may have missed, I think, are worth talking about. And particularly this one here, going back to the SEC Ripple court case. If you remember, we talked about back over the summer with Ripple effectively winning, certainly getting the better share of the verdict. And the SEC had an opportunity to appeal that decision. Well, as of last week, and it actually came out on the Tuesday, but it was during whilst we were in the last pub. So I didn't actually see the verdict. So this is a week old, so apologies if you have seen it. But the judge on the case, Torres, rejected the SEC's motion for its appeal, basically claiming that they'd failed to meet the burden to show that there were controlling questions of law or substantial grounds for difference of opinion in the matter. So, this actually, it does seem like a very positive news article and a positive step forward. The opportunity to appeal has effectively been rejected, and you think, great, that's just cementing this even further. It's not quite as clear cut as that, which is why we didn't exactly see a huge boost in the price of XRP like we did last time, and that's because there is another court date, and as it says here, Torres has scheduled a trial for end of April 2024 to address some of the remaining issues of the case. So it's not over yet, but everything that was kind of agreed and settled upon, it's still within its position, which, in my opinion, and we went through it in a lot of detail, was very positive for Ripple, very positive for XRP, and I'll be perfectly honest, positive for a lot of other tokens that were concerned that they may be deemed as securities themselves. So, yeah, we'll see where that one moves along to. Next one, this one caught my attention because I work from home 5 days a week, and so I watch a lot of Joe Rogan just because to have something on in the background. I always think it's quite interesting, even if I don't know who he's talking to. But a name came across this last week, and it's Sam Altman. Now, most of you should know him because he is the CEO of OpenAI, so ChatGPT, etc. But also, if you remember back to an Avengers call back over the summer again, sometime in July, we talked about a crypto token that he had released called WorldCoin. This one here, it was all about some sort of payment system and using an orb to capture everyone's iris and all that kind of stuff. I didn't exactly give it much of a glowing valuation or whatever term you want to do, summary, but he is behind that as well. That's not necessarily what I'm here to talk about. But what he did talk about on Joe Rogan was just, how positive he is about Bitcoin, about cryptocurrencies, how anti he is CBDCs, etc. And I always think it's quite interesting. Joe Rogan he's not particularly a fan of cryptocurrencies, of Bitcoin. He doesn't really talk about them themselves on his show, but he does allow others to talk about it. And while Sam wasn't there to talk about Bitcoin, he was there primarily more talking about AI, which I know Joe Rogan is a big fan of. The fact that he did spend quite a bit of time, bigging up altcoins, bigging up Bitcoin, rallied against CBDCs, the logical reasoning behind it all came across very well. Why am I bringing that up? Why is this particularly newsworthy? Well, there's quite a bit of fear that's come back in the market, and just think of it from a macro point of view. In my opinion, anyway, there's some incredibly smart people out there. Sam being one, we've got Bitcoin Jesus, Elon to a certain extent as well. These people that very passionately believe in what Bitcoin can stand for and what it can do, and where it can be within the future. And so it's kind of just a polite reminder that sometimes looking into the day-to-day, you can kind of lose sight of it. But I like to think that most people watching this, most people in the group, we're here because we actually believe in Bitcoin and in what it actually stands for in terms of that sort of like freedom from government, freedom from manipulation of fiat control, all that kind of stuff. And for me, as long as incredibly smart, intelligent, and powerful people are continuing to get behind it, regardless of where narrative's going with regulations or with price sentiment or whatever, I always feel that in the long run, we're going to be there. If that narrative suddenly shifts, if Bitcoin Jesus loses his belief in Bitcoin, then yeah, we're going to see some some movement within the market. But, you know, again, it was just nice to just sort of have a very sort of well-spoken discussion about it from someone who's clearly a lot smarter than I am. Shame about his other altcoin venture, but that's just my personal opinion on that one. Let's have a look. Oh, this is me just saying I don't need that one. Okay, and we had some new regulation that came into effect within the UK. And I know there's a lot of questions about that. And you know, from some of the messages coming from Sam, I've got a feeling he's going to talk about it in a lot more detail on Thursday. But one of the things that did come about was this news article here. So Hubei and KuCoin and another 140 crypto exchanges, I'm going to use that term in the loosest possible sense, have entered onto a non-authorized list. And that, you know, that can be, I suppose, quite intimidating and worrying. And what's that going to mean for anyone going forward? And I think, you know, we've got to try and understand what the change of the rules are. A lot of us have been affected by Bybit's decision to effectively leave the UK or suspend operations in the UK because of the changes that the FCA have brought in. And you've got to remember, that's all about how they advertise and market their services to the public, to existing and new customers. And these changes are exactly the same. But just to kind of like, I know I saw it in Discord, someone posted a link to this one here. This doesn't mean that KuCoin's about to get suspended from the UK. All it actually means is if you're on this list, it just has it comes with a warning. Yeah, this is the actual statement. You should avoid dealing with this firm. And unfortunately, a lot of crypto ones come within that. And, you know, take all of that with a pinch of salt. Do your own due diligence and your own concerns on some of these exchanges. I've harped on about this. I don't even know how many times that, you know, you really should be interacting with these sexes for the bare minimum amount of time. And so leaving any fiat, any stable coins or any cryptocurrencies on there for as short as possible period. But you're not going to get blackballed if you happen to have a KuCoin account at the moment. You can still utilize it in all the ways that you could prior to the 8th of September. The article does actually go on to say there are only 42 entities that have been on the approved list, which is quite interesting. And if we just scroll down, yeah, so since 2020, 291 applications for registration, but only 38 of them have actually been approved in that time, so less than 13%. And ultimately, that does 42 entities. Now, there are some on here that you probably exchanges that you have heard of, and you know, if you're looking to just spot buy a few, you know, a handful of blue chip altcoins or Bitcoin itself, the likes of Bitstamp, Revolt, and Gemini are certainly going to be there. You can click on these links. I'll post them in the chat afterwards. So this is the warning page. Now, again, this is the warning page for every single company on the FCA's shit list, if you will. So there's not 12,000 cryptocurrency ones. You kind of have to search through them. But you can see that actually, because this is all updated as of the 8th of the month when the law came into effect, the top 150 or so are all related to crypto exchanges. Now, that's why I said using the term exchange quite loosely, because some of them aren't exchanges sexes like you and I would know. They're just sort of, I don't know, platforms or whatever. So it's definitely worth just having a look at some of those. But for me, I do have a KuCoin account. It doesn't mean that I'm going to be cancelling that or stop using it, because I won't be. Because, for example, that's where I buy and sell my Casper. On the registered one, as I said, we've got the likes of Gemini on there. The only one that I also use is CoinPass. I've used them for my business account for years now. I just spot buy BTC on that. It's just cleaner. There's an XRT member that set that one up, and they've always said that they work very closely with the FCA, so it just gave me that confidence to do it. But again, a lot of these aren't exchanges, unfortunately. Now, a lot have, you know, parent company names, etc. So if you are interested in seeing what each of these do, you just come onto this website, click on it, and then follow all the links to see actually where they go. But as we say, Gemini's on there, Bitstamp's on there, CoinPass is on there. So there are some exchanges, spot exchanges, that you'd expect to use. I need a drink of water already. It's only 10 minutes in. Okay. I don't think there's anything else really to sort of mention on here. I mean, I feel like I'm going over the same thing. You know, Bybit, the wording they use with suspended makes me feel that maybe they are going to try and come back, or just wait for the regulations to change again. They do seem to change quite often. And and maybe they'll be back. So I've not closed that account there, but I have ceased all activities on it. The other thing you should note that on the SHIT list is, the likes of Binance. I'm going to prove myself wrong here. So there are certain Binance ones that are on there, but actual Binance that we know, we can still use that. They're not banned or anything like that. It's just some of these ones. I don't exactly know where Binance Invest sits compared to the global Binance or Binance UK as the one that we use for spot purchases. But it is just warnings not to. So again, because the change of law doesn't necessarily mean that you have stopped being able to utilize them. It's a shame, actually, I didn't think about this whilst I was doing it, but over the weekend I got a lot of emails from a lot of different exchanges which had said that due to the change in the FCA regulation, they have updated their terms and services, and so effectively different things had changed. And with Binance, effectively I have to re-download the app, so the app looks a bit different, and what it does is it stops me from using things that the FCA say I can't do, and obviously it will mean that certain promotions, etc., that would usually be offered to me will no longer be offered, which is fine. I don't necessarily use them or have used them in the past. So if you're concerned, definitely check your emails. Okay. Right, there's still a bit more news, but I'm going to kind of shift the news a little bit here to Sam Bankman-Fried. And this is one that's, for me, was quite interesting. Definitely caught my eye. So an author called Michael Lewis. Now, some of you may know who Michael Lewis is. He's written plenty of books that you've probably heard of because they've been turned into films, things like Moneyball, which was about, God, who was it about? Some baseball team in Oakland, I can't remember now, that tried to use sort of statistics to try and beat the game. The Blind Side, which had Sandra Bullock in it, so Moneyball had Brad Pitt in it. But The Big Short, which everyone kind of knows about. Flash Boys, which is about high-frequency traders. And so when I heard that he was going to be doing a book about Sam Bankman-Fried and FTX, I got quite excited because he's a very good author and he can turn incredibly complex subjects so that the reader can kind of understand it. Now, yeah, he does get into statistics, which kind of you glaze over stuff, but generally it's kind of like it is non-fiction, but he puts a fictional twist to it, so you kind of feel like this, you're there and the characters are sort of talking this through with each other rather than it just be more like a biography. Anyway, for me, a very enjoyable read. So when I heard that he was going to be doing one on Sam Bankman-Fried, I was quite excited because I thought this is a good author who knows how to, get into the understanding of complex things and put them across very simply. But, and I pre-ordered the book. I have the book or the audio book, but I haven't listened to it yet because from what has come out, is he's put an incredibly positive spin on Sam Bankman-Fried. He's kind of glazed over the fact that he's the most hated man in crypto, glazed over the 13 criminal counts that have gone over him, and actually looked at him as sort of a altruistic, humanitarian type of individual who's incredibly intelligent, someone that the world really needed to sort of bring it out of the slump that it's currently in, and he kind of sort of phase off towards the end and go, unfortunately, that's not necessarily the case. And so I'll be honest, I've not really looked forward to reading it. And he did a very disastrous, Michael Lewis says, 60 Minutes interview just prior to the trial, which again, this is where it was alluded to the fact that he's very pro Sam Bankman-Fried. And I'm not necessarily trying to defend Michael here, but I can kind of understand where it is because he agreed to do the story before the FTX collapse happened. So, I'm sure he was looking at this was going to be a very positive spin on how he saw Sam. But given the turn that happened at the end of 2022, given it's nearly a year now, I would have liked to think that it would have got a bit more meat to it. I think when I pluck up the courage to read it and, not smash my Kindle or anything because I just disagree with what's been said, then maybe I might find something from it. Why do I mention this? Why is it important? Well, actually, because of the interview and because of the book, quite a lot of interesting information has come out. I mean, this man had unprecedented access to Sam, to other members of the C-suite, to the likes of Tom Brady and Steph Curry and Kevin O'Leary. So all of that stuff has kind of come out in the book now. He had no reason to necessarily spin it or lie about it. And whilst that's not necessarily being used in the court, it's interesting that, jurors are going to have well, I'm sure they're told not to read the book, but they're going to have the opportunity to sort of get another insight to that. Now, whether or not you think that's a good thing or a bad thing, given the spin he's put on it, I'll leave to you to decide. So getting into the Sam trial. So it started last week, was it Tuesday? Yeah, Tuesday with jury selection, which went on into Wednesday. Then we had opening arguments. And effectively over the first 5 days, not including today, we've seen 4 witnesses come forward for the trial. And I've kind of gone through a lot of these individual news articles, and I've kind of just dumped everything that I've seen of some kind of interest on here. And we'll see how this flows. If it's a bit crap and not worth it, then we might knock it on the head. But hopefully it's there. So, yeah, okay, we had opening arguments. As you can imagine, prosecution painting out Sam to be a reckless criminal who had complete intent and understood what it was that he was doing. He was he's been a liar. He's lied to his staff. He's lied to his investors. He's lied to his customers. As you can imagine, laid it on pretty thick. Well, from the defense point of view, they've gone, look, horrific mistakes have been made, but they are mistakes. He wasn't doing anything with any malicious intent. There was no conspiracy to commit these, so intent to commit these crimes. And that's sort of how the opening arguments were laid out. The 4 witnesses that have kind of come about, I was going to put who the jurors are. It doesn't necessarily matter, does it? It's not like we're going to be affecting them. But we got Gary Wang, who was a co-founder of FTX. We got, apologies if I butcher some of these names, Matt Huang, who was from Paradigm. They're an crypto investment company. He was a founder of them. They invested a large amount of money with FTX. We got Adam Yedidia, apologies again, who's just a core developer. And then they've plucked some random FTX customer called Mark Antonio Giuliard. And I'd be honest, I didn't really get much from what he said, because people didn't seem to want to report on it too much. So I tried to break it down. It's obviously different articles talk about different things. So, hopefully it's not too repetitive. But Gary, it seems, spoke across a wide range of subjects for the prosecution, which you would expect. He's known SBF for a very long time. He was a co-founder of FTX. He understands the sort of the relationship with the other C-suite, if you will, CEOs, CTOs, etc. That relationship that FTX had with Alameda Research, and sort of just the general lifestyle that these people seem to live. So a lot of gossip. I use that term. A lot of, I want to say facts. I don't know if that's legally allowed to be said, but certainly he gave his side of the argument. So what did he say? What did he talk about that was of note? Big bombshell straight off the bat. Alameda Research, he confirmed, were granted special privileges to effectively withdraw unlimited funds from the FTX customer accounts. Now, if you remember, when you signed up to FTX, if you wanted to deposit funds, FTX kind of sold a little sob story saying, hey guys, we haven't sorted out our banking over in the Bahamas yet. So if you send all this money to Alameda Research will then deposit it into our banking accounts. And, people just did it. Like, yeah, whatever. Just send me that. And that obviously unraveled, as did the collapse. But Gary actually said that SBF told him to work with the development team and write the code to allow Alameda Research access into customer sort of accounts. It's not necessarily customer accounts. It was the hot wallets, I suppose you would have the customer funds in it. So pretty damning straight off the bat. Now, Gary, and then a few other names that we're going to mention, Nasheed Singh and Caroline Ellison, who neither of those two have been on the witness stand yet. Actually, that's not technically true. One was there today. They're all cooperating with the Department of Justice, and they've already pleaded guilty to wire fraud, securities fraud, and commodities frauds. So he's come on the record, and obviously he's been pushed to state quite clearly that, yep, the 3 of them had all done those crimes, but SBF has done that as well. So you can see straight from the bat, they are lining all of these up to just, throw him under the bus, and, well, I mean, they're throwing themselves as well. Now, the defense got in there, and this was a pretty obvious question. Come in and just say, well, hey, wait a second, Gary, you pleaded guilty. Are you hoping to avoid jail time because of this? And he said, yeah, of course I am. If I cooperate enough, then hopefully, yes, although I pleaded guilty, I won't have any jail time. Now, whether or not they were trying to allude to the fact that, it's in his best interest to try and paint as bad a picture as possible to get a more lenient sentence himself, I don't know. But he certainly has an incentive to help if that is the agreement that he's going into the DOJ with. And we'll just leave that there. I'm not on the stand and I don't know the person directly. That's up for the jurors to decide whether or not he's telling the truth. He stated that SBF repeatedly lied about Alameda Research's ability to rack up debt and rack up sort of that leverage or inability to be liquidated, that sort of ability there, which ultimately he goes on to explain how that put the customer funds at risk. And unfortunately, both him and Adam go into quite a bit of detail about that, and I'll get to why that's unfortunate a little bit later on. He also confirmed that, any lenders' funds or fees or whatever, they were actually paid back through customer deposits. So you thought you were, putting it in there, and it's just sort of proving that commingling, that misappropriation of funds and all of that kind of stuff. So you can understand why the questions were targeted that way. And Gary estimated that Alameda Research took around about $8 billion worth of FTX customers' funds over the period. So wasn't the best witness for SBF, but I suppose a great witness initially for the prosecution. Adam Yedidido, apologies again for butchering his name. He was there, as I say, as a core developer who dealt with the code to just talk about the codes. And I'd be honest, trying to read those articles or watch the stuff on it just went straight over my head. But what I could get from it was he basically came out and said, look, there was a huge bug actually in the system. And so because there was a bug in the system, we actually didn't even know how much money Alameda Research had taken from customer accounts, for quite a lengthy period of time. Now, they thought it was around about 4 billion, but it actually turned out that this bug was hiding the fact it was nearly 8 billion, so twice as much as they thought. And he also then went on to confirm that Alameda had access to FTX customer funds to also pay its lenders as well. So there was obviously coding within there. So I'm sure he spoke about loads of other things, but that's where it was. Then we had Matt, who was on the stand. As I say, Matt's from Paradigm, he's a founder there, but they were ultimately an investor. So he was you can kind of see why the prosecution had laid it out initially this way. Get someone from the C-suite who understands the management and the running of the company, get a core developer to bore everyone to death with how the coding and work between the two systems or the two companies, and then get an investor to try and get a feel for, well, wait a second, how was this sold to other people? And unfortunately, Matt confirmed that none of it was above board. Well, sorry, none of the illicit undertakings were made aware, the investors were made aware of. So they wasn't advised of any relationships with Alameda Research during the investment pitch. SBF kind of presented the environment that FTX was a safe custodian. That's the term he used of any investor's money, and particularly theirs, because it was a large amount. And they had the protocols in place and the safety mechanisms to manage that effectively and efficiently. And he very clearly came out and said, look, at no stage were Paradigm made aware that Alameda Research had this exemption from auto liquidation, which went into some detail about when all of this came out. And then I suppose probably the most damning, not necessarily for SBF, but just sort of like to sort of appreciate the scale of this is, Matt's gone on and said, right, we gave him 278 million. It's our understanding we're probably not going to see any of that back, probably due to pecking order, if nothing else. And so they've marked it down as zero. They'll get nothing from that. So, just sort of a big flash number just to sort of like scare and startle the jurors, I suppose. And I'd say there wasn't too much from Mark Anthony, but just other sort of things that seem to come out in news headlines or in podcasts about this. It does seem that the defense lawyers have been winding up the judge, and so they've either been having a very poor line of questioning, which the prosecution have objected to, or they themselves have not liked how the prosecution have laid out their questions and their concerns. But the problem is that the judge apparently was just overruling these sort of decisions, and he got to the point where he seemed to be getting so ticked off that he was overruling and not even hearing out what the rationale was, because they were just repeating the same objection, I suppose. And whilst the judge doesn't have any sway over what the juries are going to do. The fact that you will have a judge just repeatedly telling the defense to shut up, that they're in the wrong or whatever, it just doesn't paint a good picture, I suppose. Well, it doesn't for me. One of the things that was noted quite a lot was the jurors do look very bored, confused, and generally have been caught falling asleep. And, that goes back, I think, to, they need to prove, they need to have sufficient evidence and understanding to be able to say that Sam Bankman-Fried did commit these crimes. And I suppose, in my mind anyway, the defense lawyers, are they trying to just draw this out, get incredibly technical, so that they don't understand it, they do fall asleep, they kind of just wave over it, this is boring finance law, whatever, mix in with some computer coding, and just bamboozle them with BS. I don't know, but it was just interesting that they have just switched off. You and I, I'm certainly interested in this because I'm into crypto and I'm into, justice being served, and this guy's an utter crook, in my opinion anyway. And so I think I would be interested even if I didn't understand it. But these people plucked from the street, I suppose. Repeatedly, the prosecution, either in their opening statement or they went to great lengths with the witnesses to show that SBF had lied and was a liar. And I suppose this is just setting out, that character trait so that the jurors can have that understanding that this isn't I was going to say lovable rogue, but he certainly isn't a rogue, the lovable nerd that he certainly presented himself across to be, shy but altruistic, all that kind of stuff. And actually there was some deception, some knowing deception. And then randomly, I don't know why or how this came about within there, but there was comments about SBS's, effectively his legal bills are mounting up, and he's now suing his insurance company because they're not paying up for the legal fees. So interesting that he's under some pressure there, and this has got we've got another 5 weeks of this case, and then we've got another case next year. So I wonder where he's paying up from. And we've seen these ghost FTT transactions and Solana sales and all sorts of stuff, and people suspecting that they go into a wallet owned by SBF or others. Well, wonder if that will actually come out in the wash. But one of the most damning ones there was the DOJ prosecutors were just saying, look, you can't use the excuse that we hadn't presented any crypto regulation as to absolving you of any of these crimes. You still committed criminal offenses, which you should have been aware of. And the judge was very clear to say, yep, that is completely agreement. You can't be using that argument in this court, so don't waste your time with it. But as I mentioned earlier, SBF, they are really just trying to say, look, these are honest mistakes. Yes, $8 billion worth of mistakes, but honest mistakes they were. So not great. And then outside the court, as I mentioned, Michael Lewis's revelations from his interview and also from his book is that, in Alameda Research, when they undertook their funding rounds, $170 million from it, and they lost pretty much all of that in just sloppy trading. He goes on to say that the HCF, the high frequency trading strategies, were iffy, except for one arbitrage strategy where they basically bought Bitcoin cheap in the US and then sold it in Japan for a little bit of profit. But he goes on to say that actually for a whole 30-day period, they were losing a minimum of $500,000 a day, which is obviously nowhere near. It's only 10% of the 170 they lost overall. But to have such a losing streak, just, really painting the picture that these guys had no idea what they were doing. The other things that were interesting that came out from the woodwork were the celebrity endorsements. So I find that, this where Michael tries to paint Sam Bankman-Fried as this altruistic, humanitarian, non-profit. He's just out there to try and make the world a better place. And yet, Tom Brady was paid $55 million for 60 hours work. And those 60 hours work was spread over 3 years. Steph Curry was on a very similar, it was 30, I think he was paid $30 million for 30 hours work or something like that. And Kevin O'Leary, $16 million for 20 hours work. So it doesn't feel to me like that's the attitude of someone that's out here to better humanity. This to me seems like someone that wanted very famous people to hang out with him and paid through the nose for it. And then one of the other more sickening, I suppose, is, so I don't know if you remember, there was a crypto token called Serum, which was effectively SBF's sort of baby. He founded that one, and obviously a lot of FTX staff were given it in, I don't know, whatever kind of seed round they were. And because of his popularity, because of FTX popularity, this token was rising in price quite aggressively. What's interesting is that he had a clause, if you will, within the code in which he could alter the lockup period for his staff, because he was concerned that a lot of his FTX staff are going to make so much money, they'll probably just quit the jobs. And so he changed the lockup period. I don't know what it was. I think, but I couldn't find the article which said the beginning side. But I seem to think it went from like a 12-month period to a 7-year period. I definitely know the 7 years was right. And so they couldn't cash out and walk away from it. And, again, sort of like, how can we say that this is a nice guy when he moves the goalposts for people because they may not be able to help him further on in the future? So, yeah, bit disappointing there. Now, in terms of what we've got coming up, not that one. I'll come back to that one. This week, I think the absolute biggest thing this week, and I've deliberately not talked about it because I don't know if it's going to end, is Caroline Ellison. She is on the stand as of today. So she's going to give her testimony, and I'm sure we're going to uncover all sorts of things here. And I'm sure the prosecution are going to really relish in delving into some of the things that she said, the lifestyle she's potentially lived, the relationship she had with Sam, not only from a personal point of view, but from a business point of view, and how that kind of worked. I think we're going to need a lot of information out of that. As I said, she was due to take onto the stand today. I haven't seen anything that says she hasn't, but I didn't know if she was going to finish today, so I'll cover that next week. But yeah, certainly going to be an interesting one there. Who else have we got? I think that's probably it in terms of larger names now. That's just covering who was covered in the first week. And one of the other things that's quite interesting, I should have covered it a bit earlier, is prior to the case starting, they have to submit, I don't know what you call it, they have to submit to the judge and to the opposition, what their, not their strategy, but who they're going to call from in terms of witnesses and etc. And you can kind of get a feel for where it's going to go. And it seemed clear that Sam Bankman-Fried's defense team wanted to involve FTX's lawyer and expose their experience and their role within the relationship with Alameda. And obviously trying to push the blame to say, look, Sam was just innocent. He didn't know where he's going. That's why he paid professionals to go there. Well, the judge threw it out straight away and said, well, actually, no, you need to apply for that. And we'll see whether or not your legal argument to cover that will grant that they can become witnesses. Well, the application is effectively being made now, and we'll see whether or not that that motion is granted. But yeah, so that's something to sort of see where that comes from. I think that's kind of it on the Sam stuff. First week, I think we've all kind of been waiting to see what Caroline said. We still don't know if Sam's going to speak. I'm sure he'll probably want to, but I can't see that being a great idea, to be honest. But yeah, we shall go from there and see what comes about of it from that. Let me just have a look through the questions, or comments, should I at least say. ETH Foundation has been dumping ETH. Yeah, they have. I think it was like I can't remember if it was $1.7 million worth of ETH or it was 1.7 million ETH, but they have. There's so many of them in circulation. Joe Rogan would approve elk meat coin for sure, probably. I've never tried it. Moneyball was an average baseball team using stats to buy underrated cheap players. Yeah, they actually, I must admit, I did like the film, but Oakland Athletic, that was it. Yeah, they were like a team that just didn't have a big budget, so they were like, right, well, we're going to value people differently and go for the Jonah Hill was in it. That was it. Humanitarian living in Barbados, yeah. Mo's put pro WEF now as well, yeah. And Kevin O'Leary has paid 1.2 million to mention. Yeah, that's it. Social media posts and all that kind of stuff. Just shows what you can get. I mean, you can see why Tom Brady liked Sam Bankman-Fried. You're getting paid $60 million to do that. Fortunately, he convinced him to invest in the companies. I think he probably lost a damn sight more than that. But anyway, we are where we are with that. Have a digest of it. If you think that was worthwhile, I'm happy to cover it. I mean, I'll cover it again next week anyway, because I'm interested to see what Caroline has to say, what revelations that might have. But I still think that this trial, I mean, we have what's going on in Israel at the moment, which is rightly dominating a lot of the news headlines. But when this trial started last week, it was getting into mainstream media, and I think this does have a very bad PR towards crypto, and ultimately, unfortunately, towards Bitcoin. And whilst it may not massively move the price, it's just that kind of, we need retail to get on board again at some stage, and we don't want to be scouring them too much. So whether or not it's going to have that effect, I think if the prosecution gets a lot of revelations out of these characters into just how underhand they were, and how much they just took advantage of retail's trust, I think it could have massive implications for the next wave of retail going forward, especially if the mainstream media pick back up with that again. So yeah, we need to hang on to our seats and see what happens. But what we're going to talk about now is October, and we've got the trial, we've got what's going on in the Middle East, we've got the continuing war in Ukraine, we've got the debt crisis. I say debt crisis. Certainly the just continuing raising of the United States debt, $500 billion in 18 days. Are we looking to do a whole trillion in the first 30 months since that debt ceiling was increased? So does this, can we realistically think that we're going to have an October? And where's this suddenly come from? If you remember, you couldn't go at the end of last month, beginning of October, without the term October just being mentioned everywhere, whether you were on YouTube, whether you were on Twitter, everyone talking about October. That was just trending. And we had, everyone thought September was going to be bad. It turned out to be green. I think that just pushed everyone thinking, right, well, here we go. October, which is normally green, is going to just absolutely fly off the charts. And so it's like, well, should we have a look at it? What actually is October? Why are people using that term October? And has it spawned from something else? And actually, let's delve into the figures and have a look. And, we could just quickly have a look at this chart here, or this table. And when you do look over a third column from the right, October has always been a very good month for Bitcoin, mainly because August and September have been so bad. And so it might not be from a price point of view that the price has moved particularly far, but it has been positive. We've had that relief from such a sell-off that we have seen green months, and that's great. That's what we want to see, isn't it? And I mean, even now, with where we're at, we're nearly 2% up, even with the fall in inverted commas from the last few days. But we've seen 61% months, 33, 48, 40%, 30, just under 30. We've actually only seen 2 red months, and one of them was all the way back in 2014, and the one prior to that was in 2018. So coming up to halving years, we've generally seen double figure increases. If you look at 2015, 2019, and we're currently in 2023 pre-halving year. So potentially there's an opportunity for a double figure climb as well. Now, for me, I think people just need to understand that October, as I understand it, is not actually about the entire month of October. And actually, and some of you might have seen, because Simon posted it on Telegram earlier, this actually stems from something called the Halloween effect, or the Halloween indicator, which obviously, yes, is from the 31st of October. And this has been going on far longer. Both people talking about it in Bitcoin, but actually more predominantly, the Halloween effect in the stock markets, more traditional markets. And as I showed, even Simon 8 years ago, I put out a 3-minute video of how this kind of worked. And I mean, I'm going to go into a bit more detail, but what you can see on this one here is you've got all year is represented in the blue line, and this is stock market from 1984 to 2014, I think it was. In blue, so that generally shows the entire year, but actually over the summer months, pretty much a flat line. And the majority of the growth for each of these years marries into the winter periods, and that's sort of November, December months. And that's kind of what people talk about with the Halloween effect. Again, we've got it here, developed markets, I don't know what year this one's in because I'm not playing the video, but you can kind of see the black boxes, if you will, are the 6 months November to April, and they are outperforming significantly across the entire globe. The other 6 months of the year, May to October. And again, it all stems from this Halloween effect that actually from Halloween, now some people say just for a couple of months, some people say for the 6 months. We'll have a look at all of that. You see a significant increase in percentage returns across the markets. And for me, that seems to be where people have got October from. Yes, we have had positive months in October in Bitcoin. Of course we had. But actually, the October bit is the back end of October, hence running into the Halloween effect and then kicking on through for that. But for those of you that aren't aware of what the Halloween strategy is, it's effectively a market timing strategy based on the hypothesis that stocks perform better from Halloween, so 31st of October, 1st of November, to May 1st than they do from May through to the end of October. And the strategy posits that it's prudent to buy stocks in November, hold them through the winter months, then sell in April. And if you think back to May, the old saying, sell in May, go away, exactly comes from the reverse of this, if you will. And this really has been shown over time. So again, we've got a table here. If we can enlarge it up. And this is showing the best part of 40, nearly 50 years worth of S&P data. And we've got the blue, which is percentage returns, average percentage returns across the years from November to April. Then we're in the orange, that's the summer version of it, so that's May to October, and the green is just the difference between the two. And you can kind of see we're nearly 7% in November, and down at 1.5% for the other 6 months. It's nearly 5.5% increase. Now they've also said, right, well, look, that was over 60 years or 50 years. Sorry, let's just compress that down to 20, 30 years. But the figures are just the same. Well, just about the same. Get slightly better returns in May and October, but we're still looking close to 7% in November. And so it doesn't guarantee that it's every year. Of course, nothing's going to be every year, but over time, it generally suggests that this is where we see the positivity. And so, a really simplistic kind of view of I want complete hands off, you could say, right, well, I'll do this for the next 20 years. And, given that this should hopefully still work, I'll just be looking to get in early November, get out April, May, come back in and just rinse and repeat. And okay, you may not make some of the massive gains, but you're doing a very hands-off approach and still making 7-8% a year. I think you'd be pretty happy with that. So let's have a look at the Bitcoin data. And this is it. Now, this is quite difficult to see. Of course, I'm going to zoom in. But I've gone all the way back to 2011. And I've made it easy for you. I've also put it in a table here, which we'll have a look at in a moment. But you can kind of see that actually this is taking it. So these are monthly candles. We are on the logarithmic. And I've taken it from the 1st of November to the 1st of January. So a 2-month period. Which for me is what I would class as the Halloween effect. That's what I was always sort of thought to be, is leading up to the end of December. But just having a look at that. In first time we had 45%, then 20%. I'm gonna have to result to the chart now, to the graph. But you can kind of see here that as we go through, greens obviously is a positive return, reds it's a negative return. So we've had 3, 1, 4, 1, 5, 1, 6, 1, 6, 2, 6, 3, 7, 3, 7, 4, 7, 5. So actually we're getting kind of close to each other. So wait a second then. Already, does this work for Bitcoin? Because we've got 7 instances where it has produced a positive return in the months, November to January. But 5, we're almost 50-50. I mean, it's getting pretty close to a coin flip. If we have a look at some of the percentages here, 2011, 45% positive, 20, 260, minus 6, 38, 37, 116, minus 41, minus 22, 109, minus 25, and minus 18. Now, you can actually see that in the green are the bull run years. So the gold is halvings, green is bull run years, and red is predominantly the bear market years. And for the first two bull run years, perfect. We had a 260, and then we had 116. But unfortunately, it doesn't look like that paid off in 2021. And we've actually got to have a look at, this is why we need to investigate the data a little bit more, because even in 2017, Bitcoin peaked at the very beginning of December. So we had the whole month of December where it was pulling back. Similarly, in 2021, bear in mind this is from the 1st of November to the 1st of January, Bitcoin peaked aggressively and only for one day on the 8th of November. And so this had 7-8 weeks for it to pull back. So we started the bear market in November this time, and it doesn't really take into account the huge run up that we had from the end of 2020 into October 2021. So kind of misses that out there. But if we were to just look at it from a pure what return on average do we make, on average, and we can't do this year, obviously, we're not ready for that yet. It is a positive 43% increase. But you can kind of see that this was very heavy at the front when there weren't many other altcoins out there. But actually, now that we've started to get a lot more altcoins, it seems to be, and I'm not saying it's because of altcoins, but it seems to be that Bitcoin doesn't seem to fare as well. And so of the last 5 Halloween effect periods, we've only had one positive. And so this is now kind of painting a picture for me that whilst this stat looks great for October, something seems to be going awry in November and December to be getting rid of some of those gains. And it's not such a clear-cut thing, in my opinion. Now, I've tried to put a bit more data on this for us so we can kind of have a look at it. So let's have a look at it from October's point of view. So let me just hide these again. Don't need them right now. Because the influencers have been talking about October. So now we're going to do all of those again, but from the 1st of October. And there is some startling differences. I think more positive, I'll be honest. The first one, unfortunately, no. Takes us down to -4, and actually in 2012 to 8%. We get into a bull run. Now you take in October. And you remember, we always have blow off top. So we have these big increases. Now we're talking about 463%. So much bigger return. Unfortunately, the fall from grace is a bit bigger as well. We get down to 43. Then we're at 80, 61, and then boom, 230. So again, double again in just 1 month's difference. So, okay, seems to be working. Drop-offs then afterwards are fairly the same. And then we had almost double again in 2020. What is interesting now in 2021 is October helps us to eradicate the losses that we experienced in the November and December of 2021. So it's actually a positive 8% there. And then in 2022, we're down to -11. I didn't write this down here, but on average now, we're looking at, I didn't write it, but I'll write it now, 83%. 83% over the 12-year period. And then if we do just have a look at the other two, I'll put them both up at the same time. So now I've done it as the stock market Halloween effect is being reported as, so those 6-month periods. So that first bit of November to May, and guys, this is going to be a little confusing because I will start looking at something from November 2011. But of course, when I go to do the first May, it's actually May's in 2012, so it kind of features there. So they kind of flow from that one to that one, that one to that one, that one. So you kind of have to take a step back each time, which is why the first one's grayed out. So yeah, if you're going to try and replicate this, that's the rationale behind it. But the numbers are looking pretty impressive now. 1100% standing out, you know. Well, actually, then we've lost. We were at 460, but now try and take that in, and it's 123, 93, 316 in the start of the bull. When you think about that, 2020, but did the fact that we had the pandemic crash just lead to a much bigger explosion out of that, perhaps so. But then, 2021, not as impressive because we had such a sharp pullback after November that we're only seeing a 39% gain over the period. And then 2023, So 2022, 43%. I got a feeling that should be negative. Let's have a look, shall we? I don't know. It doesn't have to be negative because it goes from November the 1st down here. So it starts, it goes to March, April. Yeah, that's where the 43 is a positive. We had a good start to this year. Okay, fair enough. You can kind of see that for me, the data is kind of inconclusive. And whilst when you do it over the 6 months, then actually you start to see more recent years have started to see those positive returns. We start to see it flip from 4 versus 1 to 3 to 2 in the other way. It's still kind of putting it on a bit of a knife edge, bit of a coin toss. I suppose the point I'm trying to get at this is I couldn't, in good conscience, then use this as my sole method for making a decision. I think other market sentiment, other factors would need to be taken in place. So yes, I think it is good to look at these, and I think you could, on a long enough time frame, you can perhaps start to put a bit more weight to it. But the reality is that we've only got 10, 11, 12 years worth of data. And yeah, it may rhyme at the moment. We may think the 4-year cycle is working and these things are working there. But when we look at the historic data, things like the stock market produce, we're talking 6, 7 times the amount of data. And we can kind of draw more secure, more confident conclusions from that. And prime example, last month. Everyone thought it was going to be a negative month. And okay, it was only a plus 4%, which isn't a big amount. But it bucked the trend. And so, unfortunately, who's to say that October isn't also going to buck the trend and we're going to see another 2014 or 2018? But yeah, that's unfortunately where we need to get to. And some could argue, well, they were bear market years. Well, 2022 was a bear market year, but that was a positive. So they kind of just balancing each other out. My personal view on that, and don't get me wrong, I've now used it in a YouTube video. Obviously, it's just for you guys, but it does seem like more of an influencer kind of trending tool than anything else. And the reality behind the figures behind, except for this one chart, lead me to believe that October isn't all it's laid out to be, unless you're going to redefine what October is. Which maybe we might have a new update when we go on to Investopedia a little bit later. One thing I will say is you might start to hear people start talking about the Santa rally. Now, the Santa rally is just the week leading up to Christmas. So don't think that that's all of December or anything like that. That is just solely the week leading up to Christmas because people take Christmas off. And it can lead to large upwards positive movements, particularly with things like bonuses, etc., being paid out. That's what the Santa rally is. Going back to, okay, I'm not going to take this off its own. I'd want some bigger macro indicators as to where this is going. Well, actually, there's another news article came out today. There's another good couple of Twitter points that sort of point towards this. And I think it has some merit. And so Bitcoin analysts looked in November as price action could mirror past cycles. So Bitcoin's ongoing sideways price action has been ongoing, regardless of what you might think. I mean, since March, we've gone up from 28,000 to 32, down to 25, and then back to just under 28,000 again. We really have just moved sideways over the last 6 months. So they're sort of suggesting that actually price could move bullish soon because previous halving cycles have suggested that actually this November coming up does lead to a positive increase. What do we mean by that? Well, I showed you this Twitter account last week. I put out another good little gem today. It's all taken from Glassnode. And we're looking at this. So what we've got here is we've got the 4 cycles so far. So we've got the Genesis cycle leading up to 2012. Then we've got the first halving, which is in red, the second in blue, and then the third, which is the current one we're in green. And this is all laid out linearly over a time period, okay? And then over the right-hand side, you've got your percentage gain. So kind of hard to follow, but just come back to this, restudy it, and I'll try and explain where I'm at. But what they're saying is, each one of these periods is 4 years. Ignore necessarily the dates down here because they kind of flow over each other, unfortunately. But each color is 4 years, roughly. And what we're seeing at the moment is that as we're getting into a similar period, sort of coming towards November, it's flat going into it, which was what we had. I mean, regardless of what you might think, generally flat, moving across over the previous two cycles from it. And then we get to November, and it's apparently November 21st. That's what this line is representing here, where in the previous two cycles, we've seen that kick up. Now, it's not always sustained, but we have seen that kick up leading into it. And so what they're saying is, in or around the 21st, we may start to see another lead up, which again may tie into the Halloween effect, but perhaps not October. So certainly something to consider. And the other data that's sort of come out is to say, well, wait a second, we've just passed it. And halving dates do fluctuate, so you've got to bear that in mind. But sub 200 days prior to the halving on the previous two occasions, Bitcoin has been 60% down from its all-time high, and then it's gone to kick on. And that's exactly where we find ourselves at the moment. Now, we're not quite at 200 days. As a matter of fact, look, this is 171, but if I refresh it, it's 164 now. So that's in the space of an hour, it's changed by 7 days. It's moving quite a bit. Go to another one. That's 179 at least. That's a bit more. It's all just done on, obviously, the estimated block reward time is 10 minutes, and they try and extrapolate that over, but they accept that there are some sort of slowing down or speeding up a block. So they try and take that into account. And that's where I have that varying range. But we're looking at the moment, if you base it on these two alone, anywhere from the 22nd of March to the 25th of April as being the halving date. So we're either just under 200 days or around about 160 days. But we're getting to a position where, as I said, we don't have enough data, but at the moment it does seem to rhyme. We do seem to be getting into this. And yes, there may still be drops ahead. But ultimately, at this stage, we are on track to where we've previously seen previous cycles. And if that were to follow through even, we should then be looking for increases. And I suppose that gets to a bit of market sentiment, or not market sentiment, in terms of managing your emotions and your sentiment is, a lot of us have stayed on the sidelines and, we've protected our capital going forward, but now we actually might be suffering from feeling too nervous to pull that trigger and get back into the market. And this is by no means telling you to get it back into the market now, but just try and paint a bigger picture or wider picture to say, look, one, we're less than 200 days away. We're somewhere between 7 and 8 months away from the halving. And two, historically, yes, you may not be at the lows that we've seen in this cycle, but we're generally at a similar place. We're down 60%. Previous cycles have shown that we've not just retested all-time highs, we've surpassed them. And so you may have to sit on a paper loss for a little bit, but as we move into the next cycle, you'll reap the rewards of that. And so it's trying to just get you to remind yourselves that we may need to start thinking about, if you haven't already, how to sort of move your mentality, how to move that block that you potentially may have in pulling the trigger, in getting back into the market, not trying to catch that falling knife, and actually get to a position where you can start to build your portfolio, build your position, whether that be dollar cost averaging in, whether that be just going, you know what, I'm happy to just buy now, just chill out, not have to look at a chart for a few months and go, whatever it is. But just working yourself, if you feel that you are getting a bit trigger shy, how you can break out of that cycle. And again, this just goes back to me of, yeah, it's great to have a look at this page here, but actually, when I look at other data, such as these, it kind of gives me some confidence that, end of October, beginning of November is the right time. And I said to you at the beginning of September that by the end of October, I'd like to be pretty much fully back in the market. And that's kind of there. Okay, the last 2 weeks of investigating this may push that slightly into November. But I'd like to feel comfortable that I'm kind of there. And, I'll be honest, we're going to have a look at them in a second. The alt market isn't looking great at the moment. So certainly at the beginning of October, I'm not feeling the urge to have to rush in and fill the rest of my bags. Don't get me wrong. But at some stage, I'm just going to go, right, I ain't going to catch the falling knife. I'm going to continue the buying back in. And yep, I might be able to get some of the bottom, and then I might have to buy some back on the way up. If that's the case, fair enough. So that's where we are with that. Let me have a look at anything we've got here. UP-tober, yeah, the CAS. Okay, we'll have a look at CAS in a little bit. I think that's kind of it for UP-tober. Hopefully that's covered it. I mean, please, when I post this in, have a read if you're interested in what the Halloween effect is, how it's been used in the past, how it's performed in the past, and why it's got such notoriety even. Plenty of decent videos in here. Alessio, you know I will watch. He seems to do one of these every year, so I bet you bottom dollar in a couple of weeks' time he'll probably post another one. We can go back through his and just have a look over the last 3 or 4 years, and you'll see how it is. He looks at it both from a stocks and a Bitcoin point of view. But there's plenty of others out there. You can't be bothered to just look at this one. But definitely worth a look. But yeah, I'm keeping an eye on UP-tober. It was too perfect for that to be used after the Green September. Every influencer started to say it. And my like, I don't know. I think it's just my reluctance to get on board with the masses. It says if everyone started using it, I can just see market makers going, right, well, everyone's going to think it's going to go up in October. Let's start messing around with the price beforehand and really violently moving it in between. Yeah, it might end up going up, but that's where it's at. Anyway, that's that. Let's have a move on to some price action and see where things are currently lying. Okay, Bitcoin. So this is Bitcoin on the daily, and and as I alluded to at the beginning, although we have had a sort of a rejection at 28,000, we've not fallen massively. We've fallen $600 across 3 days, $200 a day, and we're talking about less than 1% per day, but generally around about 2.5% overall, which isn't huge. And you can kind of already see, I mean, I'll go over these for you again, and this is on the daily, but we're still holding the 10 EMA, the 50 EMA, and the 200 EMA as support. And so it's come down to the 10 perfectly, and it's bounced off it. And previous attempts of hitting the 10, it's hit it, and it's come back away. So it is getting squeezed between the 800 and the 10 at the moment, and so we've got to see where it goes. But really, for me, that test of the 50 around about 27,100 is kind of where I want to see it goes. Now, it loses and closes below that, then as we've seen in the past, it generally will continue to fall, and we'll have to have a look at it. One thing that does alarm me, whether you want to look at it on the daily or the weekly initially, and then we'll go across. Just hide some of these. Don't need them all. It's a funny looking one, but I don't think we can technically deny it at the moment, especially with this rejection. How are we starting to see a right shoulder forming? Are we starting to see some sort of neckline there? And if over the next couple of weeks, we suddenly start to retest this, and I mean, if it were to fully play out, we would be looking anywhere from around about 22 to 21,000 retest down here. We've talked about liquidity levels. We can have a look at those a little bit later on, but that kind of ties in with some of the levels that are starting to build up. Potentially, we could see that. Maybe that's that next shakeout. But it does kind of contradict with, other data that suggests that we may continue to drift up. So actually, maybe this right shoulder, either one doesn't form, or it actually is just a bit bigger. It's kind of as big as the left one. We just need to monitor that. So certainly on the weekly, that is a pattern that we're seeing. In terms of, M's and W's, I'm still within that frame of a W, rise 1, rise 2, rise 3. Weekly, I mean, is this a dropping in for an M and then we're down? That could be it now. This could be that other side of the M on the weekly, but on the daily, oops, I have to delete that. On the daily, as we've done in the past, still got that W there, rise 1, rise 2, rise 3, drop 1, consolidation. We're going to go for drop 2, and that drop 2 will form drop 1 on the weekly session. Potentially, that's there. I suppose what we really should have done on the weekly, get back to it, was actually stick these back on. Have a look. I mean, yeah, so having a look at that again. We'll go on smaller time frames, I promise you, but it's come back down. It has gone back above the 50. So we could see it getting, you know, as high as 29,000. Weeklies take a long time to play out. And then what we want to see is that aggressive drop through the 50, like we saw on the previous drop there. But the weekly time frame, we're talking about 6 to 8 months for this potentially to play out, tying in with the halvening, obviously. But yeah, certainly to look at. If we go back down onto the 4 hour now, and where things are sitting. I mean, I think I've not clicked them all on. I think we'll retest these wicks down here. I think we'll do that anyway. And then we're back down to the 27,100, which, funnily enough, was where we were on the daily for the 50. So they're kind of tying in for us. We've got vector zones and we covered down here, which again could be prime targets. And unfortunately, if it does start moving down there, although it's on the 4 hour, we are looking at potentially some confirmation of head and shoulders. Now, the only other thing you could argue, this is a big W, but let's just draw it, is have we got W there, then rise 1, rise 2, now we're in the consolidation zone for a rise 3. And actually, you know, with market sentiment being as bad as it is, what we're actually going to see is a push back up and just a quick reversal to take that out, form an M at the top, and then come back down. Certainly could happen. Tying with essentially a midweek reversal, I suppose. Okay, let's just jump straight to CAS because I'm sure that's what everyone's wanting to talk about. I mean, CAS has not had a great few days. I'll look at it on the clean chart as well in a moment, but on the 4 hour, oops, little double top there, neckline, we've lost it and we've just cascaded down. We are starting to see a little bit of a recovery. Unfortunately, we're only 15 minutes into this candle. It's a 4 hour candle, plenty of time to go. But these EMAs on the 4 hours, they're starting to go vertical. So the 5, which look at that 5, it's just held it all the way down. So, you know, don't be surprised over the next sort of 12 hours. We do start to see a retest, you know, maybe not to that level, 44. Maybe when it gets down to like 40, well, 44 dead, we start to see a bit of a retest there as these continue to fall back down. Sorry, I was just reading the thing there. But yeah, this one kind of feels like that's where it's headed. Now, let's just clean that up. Let's just stick this on the daily and then hide everything again so it's sort of a clean chart. I mean, it has fallen, you know, pretty extensively. This level here, for me, that was a decent level of support. You look at the peak from the last one, a lot of wicks, a lot of bodies hitting off that. Similarly with this one, it was a decent amount of support. We've closed below that. We lost it today, so it'll be interesting to see how it recovers. But excuse me, it is one. And then now we're getting on the daily. Is this a double top? I'm sort of like, I suppose, in the anti-view of where Simon is, but I can't ignore that at the moment. And is this the neckline? And if that's the neckline, that's 33, you know, that level of getting down to the low 2s, it could realistically happen. And so we shouldn't rule it out. Now, oops, whatever we want to do. Fib levels up to here. Zoom in now. There's a load of stuff I'm throwing out at you. You might have to rewatch some of this. But, you know, we tidy that up. Up here, it's bounced back down onto it. Obviously, we lost that level. It's gone down to the 0.5. It's reacted off that at the moment. But given where it is with everything else, I can see 4 being hit. 618 just as a magnet. Previous support down here. Off this little shoulder from that head and shoulders and then hitting the tip. That makes complete sense. But if we just then, let's just get rid of that. And let's do a bigger one. Let's go from down here. It's the highest. That's the highest point. Let's see, what do we have? I mean, I'll save these. I think, look at that one there at 31. what it's got, I mean, okay, maybe we should move it up ever so slightly. You've got all of this noise here. You've got rejection there. It's coming back down. Support, support, support. It's coming there. Support, support, bounced off. If it does lose 4 and 3.8, then I think that's where it's coming. And then some of these other key levels, if that then turns into a double top, you know, the 618 down here takes you down to that distance from the top of the double top to the neckline and back down. I think, you know, you've got to be realistic with where that's going. Now, what you could also say, and let's not kid ourselves, is this is just a natural pullback. It's had a good run. Yeah, it's going to roll over and off it goes. And from a technical point of view, we are going to need some breathing room. And we've seen it. We've seen days of falling before it then gets caught at a previous price support and off it goes. And, you know, is it that in this instance, that's where that's going to happen? And then it goes off like that. Starts to create new high. Absolutely. You know, and if it were to do that, that's healthy. That's kind of resetting RSIs, MACDs, everything else, just sort of getting, you know, the overbought kind of nature of things back into a more neutral zone, building a bit of relieving a bit of pressure, and then ultimately off it goes. I mean, I had this on there. I'm going to reset it. At one stage, what I would say is it in the top 100. It was the third over the last week. It's definitely had a hard one. It's third, 16%, but it's actually increasing since. So let's have a look. It's down at fourth. It's had a 14% drop over the last 7 days. So it's been one of the hardest hit, but again, it's had one of the best run-ups. So it's not necessarily unsurprising to see a drop necessarily like that. But yeah, that's definitely going to hit save, so I don't delete it. I'll move it to a different chart a little bit later on. But you know, that's what I can see. I sold mine, as I said, the weekend. And I put a comment in chat saying I just don't have the courage to hold it. I think I just don't have the conviction at the moment. Like, I bought 3.8, sold some, then rebought back in, then sold some, then rebought back in, and now I've sold again. And I think I just ultimately, it's probably just shows that I have a lack of faith that perhaps some of you lot have to just hold it for the long term. And so I'm happy to just make small profits each time. And all I'm doing is I'm just increasing that particular Casper bag. So when I buy, I've got a little bit more to buy with. But, you know, it's probably nothing compared to what a lot of you have got in terms of volume of that. But I'm just, you know, going along for the ride. Let's have a look. Once I've got that, let's just hide this. I've hit save, so it's not going to bother me. I'm just wondering. So I'm on a log chart, remember? Anything, where does some of these hit? So unfortunately, that one, I mean, it's wicks, and then it's lost it there. I know it looks like a body, but I've actually connected it to that wick. So today it has definitely broken that. And, you know, we talk about base support. This is 6 months worth of support. It's 180 candles worth of support. It's fairly decent. Could you make an argument for trying to move it down here? That is the other one. So that's probably another one you could draw, which would mean, you know, it loses 4. Then I think you've lost base support from pretty much all of this year. So let's draw both of those. It was this one here as well, wasn't it? So they're the other two that you might be looking at. So some of you might be thinking, okay, well, we're not out of the woods yet. Sorry, we're not at doom and gloom yet. We've got a little bit to go. But, you know, it looks like it's the only point of turning around is going to be at this price action. What's turning it around from where it is at the moment? It did hit a 0.5, didn't it? At that wick, I suppose. Okay, maybe that's what turns it around. But for me, it certainly feels like it's getting to 4 regardless. So then it is going to be testing this major trend line. And the problem with this trend line is it works here, but it's not touched this one for 6 months. So this would be its first touch. So has that lost its strength of being a trend line now? I don't know. We'll have to wait and see. But there's been some comments. But you might actually have 3 levels there, and an M and a DL1 playout. That going back to Bitcoin. I don't know which hour. If that maybe was that on the 4 hours talking about it. And I won't see. Rise 1, rise 2. I still can't see it. Rise 1. Damn. Rise 2, consolidate there maybe. Rise 3, then M. Okay. 4 hour, yeah, okay. I will try and redraw that a little bit later on. See what I can see. So Simon said 20 cents by Christmas. It's not Simon. Yeah, Simon said that. I just don't see the demand coming from retail for a token where the bulk of developers are in it as well. So I think for me, I suppose it's interesting because I was chatting with Simon about this one last night with the core developers. I didn't know the bulk of developers. Chia over there, Jonathan. I did wonder at the time whether or not it created its own black swan capable event of, something that affects, just the individuals having a knock-on effect. And I suppose every project has that. Polkadot, if Gavin Wood dies, that's going to affect Polkadot. Now, it has a team and it will have redundancy to cope with that, so fair enough. Casper sells itself on not necessarily having a team, but you'd like to think that certainly from a development point of view, as in the coding and the coring and moving things across, they have some sort of understanding and structure of how that's going, regardless of whether or not they've got a centralized team. What I can see has been the worst problem, though, is without that central figure of Jonathan, sort of leading the way with his reputation and his sort of knowledge and understanding and what uniqueness of what he wants to bring, that could certainly hamper it. Now, from tweets that we've seen, it's not like Shire and the team are utterly in the thick of it. They're safe and they're trying to get back to work. So hopefully that will stem some of the bleeding in the price, if that is what is causing the price. For me, my concern is more from a mining point of view. The hash rate has gone up astronomically. The rewards are being cut this week. I don't know when. So these people that have just bought these rigs, these people have had these rigs that are delayed, and when they originally paid the deposits for them, KS3 was bringing in $2,000 a week or whatever it was, is suddenly now only bringing in $500 or $400 a week. And, it's like, right, well, they got to sell. And these people who have been mining for a long time, and maybe they've been sat on stuff not selling to pay off their rigs. Now they're like, well, you know what? We've still made 4,000% anyway, so we're happy to sell a large chunk and get it off that. I honestly don't know, but it'll be interesting to see how the miners react to the fact, because unfortunately it's not Bitcoin. Whereas, okay, it's once every 10 minutes, but you're getting, for the large part of Bitcoin's career, either 50, 25, 12, or now 12 and a half, 6.25 Bitcoin. And you might not hit that often, but when you do hit, it comes in well. Yes, granted, you got to do it in pools, etc. I completely get it. But the rewards are definitely worth there because Bitcoin's price is still high. With the speed at which Casper is reducing its rewards. So remember, it does halve every year, but it just does it linearly over 12 months. People are taking a hit for it. And if it's not building up price, then I think it can fall. That was a long way of me saying I've no idea if it gets to 20 cents by Christmas. How many weeks is that? 10 weeks. And it's at 4 cents now. Casper. Take off the log. Just put it into context then. Let's get rid of all of that. Let's try and make it a bit cleaner for you. That's there. It's got to go from its current position now to there. I'm not going to say it can't happen, but it's a big ask. And for me, that's, it's got a 3x from where it currently is and some. From a marketing perspective, that's not good. Both informing partnerships and attracting new retail, like a knife through butter. R2 could be a thing as it bounced off the 800. Okay, yeah, I get you. Which is what I was thinking it could be. Okay, I get that. Absolutely. Let's have a look at some of the others. Dot, ugly. Ugh. Hard to look at, isn't it? Which is why, I kind of said anywhere between 380 and 360 was where I was looking. We're just getting to that now. But yeah, it's continuing to fall. So I've not felt the need or the rush to go, God, I gotta buy now. But it's getting towards my buy zone. It's just above it at the moment. I think rather than just going through each of these, because a lot of the alts are just not looking great. The only one that has been, and I don't know if anyone bothered to buy some, was Render. Now, what put me off was, are we forming this right shoulder on the weekly? And so I still stand by that. But certainly from a daily point of view, in the last 7 days, we've gone down here, 160 to 180. Well, 190 was the highest it was. So definitely with potential. But again, you know, I mean, shoulder, head, shoulder played out. So maybe that's not here. Maybe some sort of double bottom. But it's just rising up at the moment. It's coming into definitely some sort of area of resistance, previous ones. But of all of them, it's done all right over this last week. Not struggled as much as some of the other ones have done. So well done for anyone that got on board with Render. I have not yet. Let's look at total market cap. I mean, it's gone for weekly, definitely. You know, we're still sort of meandering in and around. I'll zoom in, otherwise you guys ain't gonna be able to see it. In and around that level, sort of around about $1 trillion. And yes, I'd like to get it back up to 1.2 trillion and beyond. Of course I would. We know that sort of some of the market's back, whether that's in Bitcoin or in altcoins. But you know, it's still at levels that it's got to come back down here at 1 trillion, which has had an incredible amount of support and resistance if you want to take it back 18 months. And so I don't think there's any reason to worry just yet. I mean, yeah, okay, we closed below $1 trillion. We haven't closed below $1 trillion since March, since Silvergate, you know, all the banks going under. And that dipped back down to 18, 19,000 on Bitcoin. But yeah, we closed below that, and okay, we might have to start reevaluating it. And unfortunately, I see the biggest hit going on the alt market. Now, we look at alt 3, and I'm still annoyed because, wait a second, it's saved. That one. Oh, yeah, here we go. They are saved. So for me, you know, nothing that I've drawn back in January or July, sorry. You know, this is the way we lose 300 billion. I'm going to get worried. Well, 290 really, because it did dip down there. And yeah, that's tough. But right now we're in here. The only concern, I suppose, is this 21 weekly EMA. And look at it, you know, since June, since April, by 1 week, it's just dictated where we go. And unfortunately, it's still heading down. So we may see a bounce and a come back up. But unfortunately, right now, from a very micro point of view, 335, we really need to break that with some conviction, close above it, start building some support. But yeah, it's just still moving sideways. And, you know, okay, that's what it's got to do. That's what it's got to do. Is there any one token that anyone wants me to have a look at? Because if not, I'm not sure there's too much I really need to cover. Just while you're having to think of that, next week is, I think the call will be on Tuesday, but I'm trying to move something that I've got on Tuesday night, so I might do it Monday, but I will let you know before the end of this week where that's going. Obviously there's things like the cuddle. I think the announcement happens next week as well, so there's plenty of stuff to tune in for. I'll have my camera fixed. I'm sure you're all missing that face, but I will get it sorted. I'm going to do it straight after this. But yeah, other than that, guys, if there's nothing else, there were no questions on the portal, so I didn't have anything to really answer this week. Love some feedback whether or not you want any more SBF. If not, the majority is like now I'll go on to having a token. Can we look at BNB? Yes, we will, Greg, absolutely. I almost talked about BNB today in terms of more FUD, and I didn't. But let's have a look at the price of BNB. So on the weekly, we're not looking good. We are right at the levels that we were. We just breached wick down to this, but again, the 3 previous occasions we've done that, or 5, we've cleared it back up. But you can see, you know, we had this rise up, we've dropped down, bear rectangle, drop down, another bear rectangle, and the FUD is still building. There's concerns being raised at the moment in terms of not fulfilling obligations on disaster relief money that was promised. I think they were going to donate 3 million to some earthquakes that happened in Morocco. I might be wrong there in terms of the place, but apparently no one's been able to verify that they did that. They've also got this like investment insurance fund, $1 billion worth of it, and of that $1 billion, I think they've only actually invested 10 million. So they seem to be constantly making these wild sort of like commitments from a marketing point of view, but not fulfilling them. There's little changes to the apps and the UI. So although you can still withdraw and sell stuff, they're not on the sort of the main user interface in terms of on your mobile app. They've sort of all been moved. The big buttons have been moved. Similarly, there's like a massive icon for depositing now, and you know, people are kind of saying, look, on their own, they're nothing. But you know, what they're saying is, well, why are they making it difficult for people to sell? Are they trying to hide it? A lot of things seem to be happening. CZ's shilling that we're doing more burns of BNB and all that kind of stuff. And yes, on their own, maybe they don't need to be looked into seriously. But if you add them all up, is it a case of that old analogy? You stick a frog in boiling water, it's going to jump back out. You stick a frog in cold water and heat it up, it'll just stay in there and die. Is that's what's happening right now? Because we don't realize the threat that's coming. We're just happy in our hot bath water. All I can say is don't keep any money on Binance that you're not planning on using or not happy to lose. I do have actually 2K on it at the moment because I was going to buy some render this weekend, but I got drunk and I didn't. So I will remove that tonight. Not because of the FUD, just because that's good practice. But from a price point of view, on the weekly, certainly I'm not liking what I'm seeing. A couple of drops down there. If we go drop it onto the daily, I mean on the daily it's probably even worse. Now I'm using a 21 EMA, but you know, look at today's candle. Big wick, 3 hours to go, rejected off the 21. We are floating at the bottom of a range that it's basically been clawing onto with its fingernails for the last 3 months. And yeah, we've talked about it. I'm gonna have to go back to the weekly, but there ain't anything to catch this bad boy. There is a couple of days worth at 137, but prior to that, we're going all the way down to 70. And then you got to ask yourself, have BNB or Binance been doing exactly what all these other exchanges have been doing for years and overinflating their token, and it's actually worth nothing? I mean, why would people paying 700 quid for an exchange token? It's mad. Think about it. But you know, I got to say, for those that don't like Binance, this will bring us all down. Absolutely. So, you know, if you're out of the market, then yeah, I can see why you want it to fall because you can buy it back in. But for any of us that are in the market, Binance going down, Binance going under, Binance declaring that they've got no money, whatever it's going to be, is going to set us back drastically. Might completely alter, 4-year cycle kind of movements and all sorts of things. Now, I would like to think that even if Binance were doing some dodgy dealings in the past, the last 12 months has at least taught them to, consolidate and build their position and start getting that bankroll. I mean, what little information we do get, we do know they make bank. They make money from trading fees. So hopefully they're using that better to refill the coffers if they were empty, or just, happy to take the FUD and just sort of keep on plugging along. But a lot of their reserves are built up through BNB. So if this is just fabricated like FTT was, that could be a very ugly picture very quickly. Do you still rate Neo and gas? Is it worth having some exposure to cash flowing cryptos? Well, I don't really look at Neo anymore, I'll be honest. It's one of those ones. I mean, it's even worse than Cardano in terms of what it promised back in 2016, 2017, and what it's delivered now. It's not even really worth my time, but let's have a look at it. That's not it. Start again, shall we? Where's it at? 6 cents. What's it? I mean, from its all-time high of 1,000 down to where we are now. Pretty gut-wrenching. Oh, sorry, 1,000. 200. Sorry. Pretty gut-wrenching. But it just hasn't done anything from a fundamental point of view in terms of this was supposed to be the Ethereum killer. We hear that all the time. But it had its chance when there was nothing in the market, and it just never really materialized. And that has an impact on gas because, from a utility point of view, gas is the lifeblood of NEO. If NEO's not doing anything, then what's gas doing? Now, I'd like to get back into the gas trades because, it's an easy way to just relatively slow, I get it, but potentially safe way to just increase Bitcoin. Bitcoin I already hold. There's a whole myriad of factors why that's just not the right move for me at the moment. One, we're not seeing the spike ups that we would like. Two, we need this level. I know it looks like we're close, but we need sustained period of price action moving in and around. And at the moment, we're below it. So there's no guarantee that this has got any stability. So what we need to do is this price action needs to be going in and around the EMAs, whether it's the 21, the 50, whatever it is you want to draw. The fact that it's being suppressed by it just doesn't give me any confidence that getting in now, we're going to be able to benefit from that. And then the other thing is I got to keep it on an exchange. And one of the only places that does this is Binance. And given what I'm saying about Binance, do I want to leave the gold standard that is Bitcoin or my Bitcoin reserves turned into gas on an exchange in which I could lose it? Yeah, I could send it to the wallet city of Zion and all that. But by the time I then had to do all those updates to get it back over to Binance, the spiky fade's over with. You got to be, realistically, you got to leave it somewhere where it's safe to leave it. So I'm just not there, unfortunately, at the moment. Can I see NEO return to its all-time highs? Used to be touted as Chinese thing. Exactly. I honestly have no idea, only because I don't follow it. What I would say is it didn't surpass the all-time highs in the last bull run. Matter of fact, it only recovered about half of it. So there doesn't seem to be much retail interest in it, and it's a busy market to get through. And if you're not delivering on stuff, people will quickly move on. So I won't be buying any. I don't even bother looking at it. I'm not fussed. I used to follow gas, BTC, because of the spiky fades, but I'm not even doing that at the moment. So I hope that helps, Reese, but just my view there. Yeah, so that's kind of where I'm at with it all, ladies and gentlemen. But if you've got anything else, please type it in the chat before I quickly jump off. I'm trying to keep these a bit smaller, a bit shorter. So again, around about an hour and a half, which seems to work a bit better for everyone. And, we know in a month's time, your content you're going to have an opportunity for content, whether it be crypto or Forex, pretty much every day of the working week. So I don't want to waste any more time than necessary. I'm just hoping someone's going to type a question in chat. Doesn't look like you are. So all I'm going to say is thanks a lot for tuning in. Sorry, the camera failed as I clicked go live, but instead of fiddling around, it just seemed better. Have a great evening, everyone. I'll see you on Thursday. Book the cuddle. If for nothing else, then just watch me butcher a presentation on stage. And have a great evening, everyone. Speak to you all soon.